presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. One thing to talk about initially, the ruble. I know you guys are probably hearing that all over the TV screen right now. We've almost reached 80 versus the dollar this morning. The ruble's getting hammered. They've raised interest rates to try to stop this up to 17 and some change percent from 10%, and doesn't seem to be doing a lot, but may have some trading opportunities on the ruble right now. I'm showing it in the den, and what I want to do is bring on the Oracle of Moscow, Eddie, if he's around, in Mundus. He's the analogy to Warren Buffett in Omaha on what's going on in Russia. How are you, Eddie?
Hey, John. Good morning. Good morning, listeners.
Good to hear your voice. I know. Well, I got up at 2 a.m. this morning, 1:30 a.m., and started talking to you about this ruble because I've got things set to wake me up if certain situations happen at night. And I was on the phone with you, and what's you're on with? I know you've been on with the guys in Moscow for the last couple of hours. I mean, what's your take on this?
We've been with the guys in Moscow, with the big players of this game. Not for a couple hours. We've been from like 4 or 5 hours on open line on the red phones, like Kremlin type of stuff. But what happens actually? The Russian Central Bank increased the rates. It's not, of course, it's not a secret. But Russian Central Bank actually chose the best, little bit better thing, one of the worst, to have financial system saved, because that panic or emotional factors what drives the market, and including this ruble speculators, which they think that the speculators are from Russia, but they probably, I don't know, they are mistaking largely, because rubles get speculated across the world, including I've been getting quote from Hong Kong exchanges, so it's not that Russian players are involved here, all international speculators are involved here to that. Right. But of course the consequences would be very, very long lasting, and they're going to hurt the economy, of course, long-term economy, because long-term money will be expensive, and but they chose to save financial system rather than just watching and trying not to get into recession. But the recipe for the recession is like done. Long-term money is expensive. Some corporate bonds, while I was on the phone with one of the RBS company, which is oversees some, involvement into the financial thing, they looked at some corporate bonds 200% annually. That was, the corporate bond. That was going to panic.
I don't think I heard.
This country's toasted. It's done.
I don't think I heard.
6 months from now, we'll see, all kinds of bankruptcies. How can you run a business, John, if you,
I don't think I heard you right. Did you say?
Go ahead.
Did you say 200% corporate bond rates?
Yeah. I've been telling to this gentleman. His name is Igor Dines, and he's oversees some bond fixed income funds, and I say, hey, look, take a look at corporates, take a look at this, take a look at that, take a look at 2 years. He says, hold on, and he looked up. He said, Jesus Christ, it's going 200% annualized. It's a Russian Transneft Corp, and I said, no way, no. He double checked. He said 200% annualized. So it's a panic. It's done. This country is toasted. They saved the system. I can see ruble is bouncing right now significantly from 80s into, and probably going to close maybe in 64s. But the bonds, they crossed the lines, crossed the tape, and somebody got them. They done. Those companies is done, John. Long term, Russia is done. It's over. They're gonna. I don't know how.
Wait.
I have no idea. I'm not a banker, but
when you say it's over, what's next? I mean, like,
they're looking into the BRICS. Of course, they're looking for international financing. They are definitely going to shift it. They probably have to have international financing, somehow get involvement with the finance of the companies that has components of their business that they have to buy in the international markets. But those companies who produce everything inside in regional, of course, local manufacturing, they will of course thrive. But sanctions will probably take the place. They will not be allowed to sell anything into international markets, or if they sell in local markets, they will be probably capped some kind. I don't know. This is serious panic. This is not good for Russia long term. Maybe definitely the oil energy denominated companies will benefit from that, because oil based in ruble. It's actually just picked up a lot, and that would attract long-term investors because oil is cheap in ruble-denominated assets.
Right. Well, I know we're doing some business over there, and I'm personally concerned about that business stopping just because there's such maybe a priority to clean up things internally right now that like the last thing they're thinking about is expanding their business and doing business with other folks right now. I mean, like, do you think there's, because I know we were trying to, we're actually doing some things with some guys, changing some currencies over and trying to, hedge or bets and things like that, which is kind of, probably been the most heavenly thing that they've ever gotten from anybody, which is what we were telling them to do. But like doing things like trying to get Russian rubles out of there and paying an 8% VIG to a Latvian bank to try to change rubles into euros and pay their bills before the ruble gets slammed again. I mean, what is the business climate of just regular folks? I mean, I know you spoke briefly about that right then, but what do you think is next? I mean, for people, multinationals doing, trying to do business out of Russia.
What inside of Russia, I cannot speak about what will happen inside of Russia internally, but externally, what we're trying to do, and we consulted today. Of course, you and I having some expectations that Russians they were due to do some business with us, but I think, John, we probably have to put that on the shelf and forget for some time, because there's external internal panic in there. The market is panicking. It's an emotional factor. Just nobody does probably anything until dust settles, and how long it takes dust to settle, or 2 weeks, or 3 weeks, or 2 months, or 6 months, nobody knows. But what I'm suggesting right now to the people who, not people but company, the same RBS, who drives international investor into Russia investment, simply don't panic, because this is a opportunity. This is definitely opportunity. When everybody else panics, you have to react and act.
I agree with
act
that.
accordingly.
I agree with that.
Invest into the corporate bonds, not now, not right away, maybe 2-3 weeks from now when dust settles, because and then hedge rubles with our techniques. They know our techniques. They've been introduced with that, with our actually scanners, with our profiles. They know the quality of that. So we are offering these guys to hedge ruble using our techniques. Our institute, our long-term investment models, that we can do that perfectly. We can deliver that type of hedging with a very high percentage of success.
Right.
And we're offering to get into the corporate bonds, into the government bonds, and hedge a ruble with our technical stuff. So it's very good, actually, opportunity in this time. Everybody panics. You got to step up and take that.
Let me ask you this. This is kind of like a little bit farther in outer space, what I'm getting ready to talk about here. But what if, and this is a what if this has been a huge play by some of the oligarchs and Putin, and what if, they expect Putin, and he's kind of maybe alerted them that maybe he's going to say uncle a little bit on some of the things that have been driving this. I know oil has been a huge factor in this whole thing, but let's just say Putin comes out with some statements that are a little bit more appealing to the international community, and the ruble kind of stabilizes back down. Let's say back down. I can't believe I'm saying this, but stabilizes back down into the 40 area. For starters, do you think anything like that's going on, or do you think that the climate towards Putin is changing by the Russian society in general, because Putin has, traditionally had somewhere between a 60 and 70% approval rate, as far as we know that the polls are correct, by, the Russian population. Like, okay, so there's two things, the oligarch thing and the play on the currency in general, that maybe they're taking their hedges off and are just going to make a massive amount of money. And do you think Putin's going to possibly come in and start playing ball here to save the day?
About the first part of your question, ask me like probably next week, not probably but next week, then I would know more. When I talk to the biggest lobbyists and inside players of this game. Now, I don't know. I don't want to speculate.
Right.
But as far as I would definitely know more inside information what is happening in there. So that would be call me next week, and I will know more about it.
Right.
But what I want to say, John, I want to say about option plays. I just looked at the option crossing when ruble was at 80. It was tradable opportunities in there. Calls of 80 ruble calls of the June of the 2015 expiration. 80 ruble calls were going for 700 pips, so for 7 basic points. So so you
they're trading at 87.
It's a break even, John, at 90 at 90 rubles per dollar. This was a free trade, and now as we speak, it already evaporated, and maybe 40% of its cost. What the price is at this moment, and probably when dust settles, will be probably quoted at 400 pips. So that's what opportunities you got to take. You got to take volatility. You have to take a risk. When everybody panics, you take it, and that's all I can say. I'm a trader, I found an opportunities. We've been led to the right direction by our profiles for this ruble long term. We avoided staying on the wrong side of this thing. Not only on the wrong side, it led us to the right side. When the ruble was at $53 per ruble, 52 rubles per dollar, then we still won. Maybe is it up? No, it was above profiles. Then it was 60. There were no profiles. When 70, there were no profiles. There were 80, no profiles. Even in a weekly, there is no profiles even now. On probably 60, 70 minutes, we can get profiles coming very soon, and then we can get involved into this sort of play. But what I'm saying, our tools led me to the right direction, long-term direction, and our ability of, our knowledge of having a little bit more knowledge about options, but everybody knows about options, and extremely high volatility allowed us to make those kind of decisions and trades that 80 ruble
we're going to go to a break right now, folks.
June option, call option was a
and we'll be back on in just a couple of minutes, and Eddie's going to hang out with us, so we'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. Eddie, are you still with us? Hello? Okay.
I'm here, John. I'm here.
Okay, great. There's a lot of things to talk about with the Russian ruble. That goes without saying right now. The second question I had was, considering the popularity of Putin with his, population, have the guys that you've been talking to saying that that's kind of swaying the other way, and Putin's got somewhat of an ego and all that, and he may try to find some way to kind of appease the the patrons there? What are their thoughts on that?
Investment community, the oligarchs, they are on the side of government, of course.
Yeah, but the government might be on the wrong side of logic.
And majority of population, they still blame on Western countries, on particularly the United States and Europe, for the sanctions. That's what they do. Actually, I don't know what popularity. I did not see the polls, but everybody, majority of Russians are on side of the Putin and on side of their political direction and. International politics, they've been approving approved by Putin's international politics direction where he is going. And majority of Russians are blaming, of course, the United States as the orchestrator of all those that political instability in Ukraine that escalated into the civil, unrests, or softly speaking, civil war inside of Europe. That's what is general opinion as far as I met either on each level or everyday folks or oligarchs. Oligarchs, of course, they have to be on the side of the Putin because everything what is done on a bigger scale has to be approved and sanctioned and green light by the central bank and by big time players. So
right. Well, I want to show a couple of things here, technically speaking, like you were speaking before. I mean, we've had some obvious, and let me just try to. This is our daily on the ruble here, and as we've talked about, it's okay to be long, not okay to be short relative to profiles. And as we had that most recent, I mean, we've had breakouts, we've had kind of come back and retest situations. Let me just kind of blow this up a little bit. See that one, breakout. There's been zero reasons to be short this thing since, God, let me just see if there's been any reasons to be short this. Yeah.
Yeah, since June, July, since 33, John, when the ruble was at 33 to the dollar. And I think, John, we need to put this chart as our textbook, in our textbooks, in case, that would be, take a look. Yeah. And this was zero reason not to be long, You are putting this wrong way. This was a zero reasons not to be long.
That's what.
And we never had not a single opportunity to be short. Of course, zero reason to be short, but that would be the zero reasons not to be long.
It's been.
I would say that.
Well, it's another way to say it, of course. Yeah. so the most recent breakout, 54.8971. Let's just kind of focus on that. So this is our daily chart of the ruble USD, and 54.89. So let's go back into this 54. And let me just kind of pull this up. This is our 240. So this is the things, and we're putting the ruble on the scanner like within the hour, just so you guys can kind of, since this thing has been in play, we had a lot of requests put on there, so we're putting it on the currency grid. This is that 5460 area, 5460.70, and we had a dual time frame on the last breakout above that 54.89, so had a little DMZ to get through, and then it was just off to the races. So what do you do now? So here's our 240s, and since we haven't had any information on our daily to key off of except for just be long and strong, we had that kind of pull back into maximum kind of right below. This is kind of Custer's last stance on this time frame around 58.43, rounded off, hit that, and boom, and just catapulted up. What is that, 20 some 2,000 pips. I guess that's the way.
Yeah, 20 basis points, John. You're right. 20 basis points.
And that
doesn't matter when you take the calculated risk using profiles. When a trader takes calculated risk using profiles, 2 or 3 trades a year will come of the magnitude as this one. That's what you make your money. Make one day. Even if you're short-term trader, if you're longer-term trader, on the dailies you had zero reasons to go other than that direction. The trending markets will happen, John, and that will happen. It will happen with emerging market currencies. It will happen to the Australian dollar. Sometimes it did happen with the dollar, yen, or yen pair.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. Eddie literally had to take a call from Moscow right then, so he's going to drop off. It's been talking about the ruble, and this is nothing I would say goes short, but I kind of have this feeling that with the fundamental news that came out and then the exasperation kind of move, and now we're kind of settling back. I think that probably the highs have been put in for this thing right now, just from seen this movie before with these type of announcements. So, I'm not saying this thing might not go higher, but I think we're probably going to try to find ourselves right now with the ruble, considering that we have had a 2,000 pip move in the last 6 to 8 hours, and that's relatively large. Not saying it can't go higher, but I feel like that may be somewhat of the highs for the immediacy right now. So let's take a look at some of the things that were really kind of being affected by that ruble move. Let's just drop right down into the S&Ps really quick. So, we talked yesterday about that 2014.5 area, kind of leveraging off the downside. And not 2014.5. That was on the December contract. I'm sorry. We talked about the area of 1968 sitting down here for kind of some targets down below, and that intermediate breadth being negative in a pretty big way. But the The weekly, and I'm looking at the weekly right now, still positive without the market opening, actually. But we talked about that would be the kind of back the truck up and possibly buy point around that 1968 area. We've been down as low as 1961.50. Now we're back above at 1977. So, again, I think we might have a floor down here around 1968. I got to orient stops around here. I actually got stopped out of it personally myself this morning trying to bank around that. But again, I think the ruble news is out, and we're kind of going to be looking for where's the balanced area, so to speak, on the ruble now. And I think the rest of the world is going to possibly go, oh well, crude oil's at $50. That's not a bad thing over time. Blah blah blah. So here's the situation again on the U.S. S&P 500 futures for March. Let's take a look at something that kind of astonishing, actually. The gold situation, which, here's the daily. Here's that 11.99 rounded off area that we kind of came down in yesterday, and now I've gotten back above. This is kind of disheartening for the longs on gold. It just, I know that this type of unrest usually drives people into something like this, and it's just not happening, and it's a little concerning for the longs there. Let's take a look at the dollar really quick, because this is something that obviously with the yen has been kind of getting hit a little bit. 88.1, let's just call it 88.12. The support on the dollar has been and has been hanging in there right at 88.37. So we're below there, not significantly, but I think the ruble will probably settle down. Like I said, the dollar may just kind of get back into gear here. So there's no reason to be in the longs right now on the dollar, because we're down below that fair auction low there. But let's take a look at a couple other things that are related to this. And let me just pull up the weekly on the dollar here. We do have a new possible profile that may be appearing based on this yellow bar here, indicating that we may have a new fair auction appearing here on the dollar. So let's take a look at the yen, because that's obviously been moving tremendously already today. It's been down as low as 115 and some change. Here's the situation on the yen, similar to the dollar. And as we look at this 118.08, this is kind of the uncle point for this consolidation to move higher, staying within the fair auction. And now you got to just kind of sit back. Not the time to probably go long this. Let's wait for a new profile to appear, or let's look at the, oh my goodness, we got a bad print there. Okay, let's see. Probably could refresh the data, maybe get rid of that. But that's the situation in the long term and the intermediate term on the yen. Again, we've been kind of focused on the Australian dollar. This is really not significantly reacting to the ruble turmoil, if you will. 82.56, still kind of the uncle point on the way up, and then you got a higher leverage point, 84.70. It's 84.79 sitting way up there, but right now it's still very bearish on the Australian dollar, and I think we could head lower on that. Let's take a look at the euro. We hadn't looked at the euro in a long time because it just has been languishing down lower, but here we go. We've gotten back up into a very ripe situation at that 125.74 area on the euro USD here, and that's the weekly unfair lows, and that's where this is a long-term euro chart that's been trailing down since that 135.52 area that we talked about. Okay to be short, not okay to be long, all the way down into this on a long-term basis. And I feel like you've got an opportunity, not of a lifetime, but a really good high probability opportunity sitting here, considering that the highs are right now on this move up 125.70 rounded off, and those unfair lows are 125.74. So you've come up there, kissed it, you backed off about 50 pips here. I think we're going to head lower on the euro here, and that's the long-term leverage point. And by the way, unfair highs on the daily 125.06, so we're kind of in that little DMZ area, if you will. Major confirmation on the euro to stay short would be to get back down below 125.07. So remember that weekly takes precedence over daily over 240 down the line. You definitely have had a gift. I never understood that gift horse in the face. I was going to say that, but I don't really actually understand it very well. Maybe somebody can tell me about that. But unfair lows on the weekly are the most powerful, along with the inflection points on the weekly as we trail down daily 240, 60, 30 down the line. So here we go. A couple other things being affected. Let's take a look at Europe. And I'm going to have to change. Let's see here. The CAC, all these things are super effective, but let's take a look at the Shanghai. And we talked about the Shanghai, this move down the other day on the daily. We talked about this not being the end of the story, so to speak, because we've never had any new information appear. We had a profile appear below price action, which is always a bullish sign in general. And we talked about trying to buy support on the Shanghai, and here we go. You see this, folks? This is what you call to the tick. And here's the 240. As we use this to regulate the trades one way or the other, we talk about this all the time. And these are on the scanner. As I pull these things up, I'm going to pull up our scanner really quick. And I'm going to go to the Shanghai for the breadth here. And I'm also going to pull up. Sorry. Let me pull up our futures. I think it's on the futures section. We don't have the Shanghai index in here right now. Let me see where that is. Uncheck that. Go into here. All right, I'm going to let that load. We're going to show you on the scanner how these inflection points are where they are without having to look at the charts. But 2804, unfair lows on the 240, showing that is the highest probability situation you're going to have to continue the long trend up. And we reached a low that day, that day yesterday, actually, 2 days ago, actually, of 2808. So that was 4 ticks away from that on a very violent move, showing the power of the profiles here. Okay. We got to take a look at crude oil. We're just kind of going down the list of the usual suspects we got to pay attention to right now because of the situation in Russia and what's driving that. And yeah, I mean, this is West Texas crude, and this thing's making new lows down here at 53.75 right now as we speak. So, again, I heard something. I think Eddie actually had a different figure than this, but every $10 drop in crude oil per barrel is 0.8% shaved off the Russian GDP. And I actually think it's a lot higher than that because once you kind of start getting into, things that survive and depend on crude oil as it gets lower and lower, that number kind of parabolically moves up. So I don't think that 0.8% of their GDP is actually a correct figure at this stage. I think that's probably the first step down from 100, and then it continues to get worse and worse as we go lower. So take that for what it's worth and how that factors into what's going on with the ruble and a couple other currencies. But again, look, this is our 240 situation, and as you look at the short trade, there's been some disturbance up here around 76. The only time we've had a green chart pattern here above our profiles, and then we had that red bar. Basically using the short trade on our long terms and using the 240s to regulate down. And again, I'm going to go over here and pick my futures on our scanner, drag it over here. This thing is really, really handy to have, and I'm going to go in here to West Texas crude, and as you can see, all reds across the board, and here's the inflection points, by the way. So 240s, as we just saw, bottom of the box, 55.39, top of the box, 58.73, POC at 56.87. So you've got basically zero reasons to go long crude oil here. That's been the case. We're in our 12th week below our weekly profiles, and I want to show you as this thing has regulated the trade down, you've had breakdowns and you've had selling resistance opportunities all the way down. And that is spawned from the concept of here's the daily, here's that 76 area where we just had a little bit of disturbance on the 240s, but on long term, as you can see here, hasn't given you a lot of reasons. Oh my God. We haven't been above profile since, my God. Ooh, 100. $50 a barrel on a crude oil trade on a long term with really no reasons to even get concerned about it. That's not a bad situation to be in. $50 down move in crude oil, half the price of crude oil from 100, and you've had zero reasons to go long. And all the reasons in the world to be short. Now, I know you guys are going, thanks for telling me now, but this has been pretty apparent if you've been watching this show. There hasn't been, I don't think we've talked about going long crude oil since 100, and not patting ourselves on the back. It's just been a pretty easy, simple read as we go down, and I'm not going to veer away from this concept. Here's the dailies. We're well below profiles, but again, using the 240s to regulate the trade, there's that 55.39 and 58.73 that the scanner just talked about as the inflection points to be aware of. So how do you trade this? You could trade this relatively tight with stops above 55.39, kind of staying out of the market in this fair auction. If we get back into the 58.73 area, that's a selling point. But you've got to pay attention to the scanner. Let me pull up the scanner again. You got to pay attention to the scanner and concern yourself to see if there's new profiles attempting to appear, and if they have appeared, what are the new inflection points on those other time frames? So again, that's the situation. Here's the situation on the breadth on the Shanghai up top. So this is really two. There's two parts to this software, in my opinion. There's the ability to scan instruments and find high probability setups, and there's a guidance tool on the indices in general, which will also guide you through high beta instruments called our breadth indicators up top. And going back to our S&P 500, here we go. And as you can see, we started turning a while back, and I'm going to pull up this is our admin terminal for the breadth. I'm going to show this, and just to kind of show you some of the crossovers as we've been speaking about them, let's just take out the middle ground. And there's that December 9th, December 10th crossover from positive to negative on our daily. And there's that October 20th, October 17th crossover from negative to positive. So we should have been long S&Ps and long stocks in general up until the crossover December 9th, December 10th. And as we look at our March contract here, and we'll get back into 1977. This is kind of stabilization time, I think, for the S&Ps, in my opinion. Here's that December 9th, December 10th area where the breadth changed to negative, and then that was obviously a selling opportunity around that 2051.90, 2052 on the March contract. So again, we're pretty far in the hole here. Breadth is still negative. No new boxes appearing on the daily, so don't see any long-term trend-changing situations here. The longest time frame that I'm looking at is this 1968 area, and longs have to, in my opinion, be prepared to brace yourself and say uncle below that area. We'll be right back, folks, for the final segment, and maybe Eddie will come back off one of those calls from Moscow.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report, that's 14 months, for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. And since I'm in North Carolina, I traditionally chew a little tobacco here, so I put one in. I hope you guys don't mind. It's I grew up in a tobacco field here, and I hate smoking, but I don't mind chewing tobacco. It's one of the more relaxing things to do, in my opinion, but don't tell your kids that. Anyway, all right, so as we look down the list here, we looked at the U.S. futures, and, you know, we talked about the Shanghai a little bit, but let's take a look, and I'm going to go back down into the FTSE. You know, Tom was kind of missing this yesterday, and it's been a pretty quick, easy read. I mean, you know, it's been okay to be long above the former profile, and that was a pretty long profile, actually, top 64.29. These are the FTSE futures, by the way. And as we started breaking back down, this is a long-term view, and there's a lot of reasons to pay attention to these fair auctions, because this is where we feel, as you can see, this kind of gets a little thin going back because this is a new contract, the March contract. There's a lot of reasons to pay attention to these fair auctions. It really regulates and puts kind of lines of demarcation on the chart for me where I've got to really think hard why I'm actually considering being long below these things, because this is where the market with our algorithms has said that, hey, this is the balanced area. We've got to pay attention to this. And when we're outside the balanced area, outside that meaty part of the bell curve, so to speak, prices could move very quickly because those are outliers, and that's where you more than likely want to trade in those areas. And did a webinar a little bit on that the other day. But, if you guys want to, get into more about, why these things are really important, send emails to TFNN. Let's get another webinar going. I want everybody to fully understand what I'm talking about most of the time. Some of the times I don't know if you can understand what I'm talking about because I don't make sense sometimes. But if you have a kind of a digest or submit to the concept of what we talk about on a day-to-day basis on this show, I think it's a good way to kind of regulate the minefield of trading, and that's kind of what I do. I like it very black and white, and that's kind of what this thing does. So this scanner really is able to put some things in light on that level. So if I go to the S&Ps, or actually let's pull up the futures again. I keep closing the futures down and starting them back up, and thank God I'm on a 20 meg up and down connection here today, because this thing really loads quickly when you're in a good connection. So as I go into the S&Ps and I look across here, we talked about that 1968 area, and there it is on the scanner. There's, we're gray, we're in a fair auction on long term, we're below here. So daily 240, 60 on down the line, but right now, considering that the weekly breadth is still hanging in there, you got a kind of a battle point here around that 1968 general area. And as I go into this is the FTSE. I just kind of gave that as an example of, it's okay to be short, not okay to be long on this particular product. But as I go back to that S&P, and I got about 30 seconds here, that's why I'm going back to the S&Ps, not to beat a dead horse. Here's the weekly. Here's that area of concern, 1968, and that scanner just puts it all on the map for you. So the thing I like about it is I can go in here and I can find opportunities based on what I want to see, and if I get rid of those, I can leave it in and leave the futures in, pull up the internals, filter for conditions that I want to see, just like we did yesterday if you're watching the show, and pick out some things that might be good bang for your buck type situation on high probability setup without having to stumble across them and bruising your chart. Thanks, guys. Deep Road Connect. It's been great. And thanks, Eddie, for coming on today. We'll be back again tomorrow, guys.